We present to you Forex training or tutorials on this channel, Leading Forex. My name is Kofi, your admin for this channel. In today's video, we are going to look at two main things. One has to do with entries. I know those of you who have watched some of my videos will realize that I talked a bit about entries, but there's something very important that I left out that I think a few of you are asking questions about it in my inbox. So there's a need for me to touch on that aspect. So we'll be doing entries, all right? Also, we will talk about Forex psychology. And today's Forex psychology will be on keeping records of your trades. I'm sure you might have heard other traders talking about it, that you need to keep records of your trades, keeping a journal, a trading journal, so that you can always refer and do a review and the rest. The question here is that necessary? Is that important? At the end of this video, you will get to know whether it is important or not, and what kind of journal you should keep. All right? I'll tell you the type of journal you should keep if it is important. Is that okay? All right, my name is Kofi, your admin for this channel. If you are new, then I'm sure what you are doing here or what we are doing here will be something new to you. But I want to say for short that we present to you Forex training or tutorials, which is one playlist on this channel. And then the second aspect of this channel has to do with forecast or signals that we bring to you every weekend, especially on Sundays, whilst the market is still closed, so that we prepare you towards the beginning of the week. So these are the two main playlists we have for you on this channel. So if it is the tutorial playlist that you want, go to the description of this video and you can start watching the playlist, all right? That is from part 1 up to part 54, which is this video. So we have a lot of videos for you. But those of you who are already here, you know what we do. So without wasting my time, let's go straight into today's tutorial and see what we can all grab in this video. So free Forex training, here we go. Now, like I said, in our Forex psychology today, we'll be talking about trading journal. It's very important. Keeping records of your trades. We'll look at it. And again, let me say that if you want to contact me, these are my handles. On Telegram, you can contact me personally at Kofi Dollar. That is my handle. If it's email, you can send me email via leadingforex8@gmail.com. If it's via phone or WhatsApp, it's the same number. So you can contact me easily for us to vibe. Now, let me continue and say that Leading Forex, we want to be your alternative. That is what we stand for. So stick and stay with us here, and I'm sure you will learn a lot from us, whilst we also learn a lot from you. Okay, now, let me talk about entries. First of all, entries are very, very important in Forex trading. Before you can buy and sell, you will do that based on entry. You will enter into the market to either sell or buy. So entries are very important. Now, why am I talking about entries at this moment? There are a few of you who have sent me messages asking me, in case you want to set your take profit or your stop loss, how would you be able to know your entry? And a lot of people are of the view that they want to even calculate their stop loss and take profit before even entering into the market. So all these are things that will need clear explanation. And that is why I am going to take my time to explain this video in detail. So don't be in haste to leave, because you know me already on this channel that I take my time to explain things. I am not the fast speaking type of person. I speak slow but sure. So take your time and watch this video, follow us, and at the end, you will surely grab something. Now, the screenshot you see on the video right now has to do with our forecast for last weekends. Today is Saturday as I talk to you now, the dates, as actually, I think 25th of June. Yes, today is 25th June 2022. So today is Saturday. The forecast I gave last week, Sunday, this is the results. Okay, I am not going to talk about the results here much. When I come tomorrow with the forecast for the next week, you will surely get details. But I want to talk about entry, okay? So assuming you watched my forecast on Sunday, last week, Sunday, and then you decided to enter some of the forecasts I gave or the entries I gave. Now, how do you know your entry? Or if someone should even send you a screenshot like this, how do you know the person's entry? And how would you be able to analyze this screenshot when you see it? Okay, it's so easy. Let's do this. So assuming I sent you this screenshot, this is what you will have to do. Now, on each of the trades, you are going to take note of something very important. When you take the AUDJPY, which is the first currency at the top, you will see a price below the quote, which is the AUDJPY. You see a price here. That price that you see, and then you see an arrow, and then you see another price. These prices you are seeing here are the entry price and then the closing price or the take profit price. Okay, so the first price you see below the quote is what we call the entry price. So with this trade, for instance, the entry price is 93.976. This is the entry price. This is the price at which I entered this trade. And then the second quote that you see here, or the second price you see here, is where I closed the trade, the price at which I closed the trade, or the person closed the trade, the price at which the person exited from the market. That is the second price. So the second price here is, which is the exit price or the take profit or the stop loss or whatever, depending on where the person came out from the market. The person entered into the market at this price, and then he came out of the market at the next price you see here. So the next price you see here is 94.97. Oh, my 7 is very nice. 976. So this is the exit price. So the entry price is always going to show, and then the exit price is also going to show. That is, if the price or the trade is closed. All right. If the trade is closed, this is how you can read the entry price and then the exit price. So with these two prices, the difference will be either the number of pips he made as profit or she made as profit, or the number of pips the person lost. Is that okay? So how can you calculate to know whether how many pips did the person make, whether the pips were small or huge? You need to know. So having these two prices, let me write them again. The entry price is 93.976. Oh, come on. I want to write a 6. Okay. And then the exit price is 94.976. But remember, this is a buy trade. So this is a buy trade, means that the trade is going to go up. So it means the price increased to 94.976. So if you are fast, you can easily know that this is 100 pips, because 93.976, 94.976 is 100 pips. That is the difference. So the difference between these two prices is 100 pips. So this was a 100 pips take profit trade that you are seeing here. And the 100 pips on AUDJPY with a lot size of 0.10 gave me $73.41. Are we good? So again, you want to check the date on which this trade closed. The date on which this trade closed. This is the date over here. This is the date that the trade closed and the time. So if you want to know the date the trade closed, not the date the person entered the trade, no, the date on which this trade closed. That is it here. 21st of June, 2022, around 4:35 or 16:35 p.m. That was the time this market closed. It's as easy as that. So once you look at the chart, you should be able to analyze this chart to know. So if you take the next currency, which is GBP JPY, the entry price here is 165.119. And then the closing price or the exit price is 166.119, also 100 pips. And GBP JPY also gave 74.00 profit. And the date on which this trade closed is 21st June 2022 at about 10:05 a.m., which is 10.05. That's the time. 10:05 a.m. is when this market closed. The next one is Euro JPY. The entry price is also here, 142.045. The exit price is 143.045. Also 100 pips. And you can see the results here. And then the dates. This one closed at around 11:30 on the same day. NZD JPY 85.426 and then 86.426, also 100 pips. And then the date is still the same, but the time is different. This one was 17:06, which is around 5:06 p.m. The next one is CAD JPY. The entry price is 103.781. And then the closing price or the exit price is 104.781. Also, you see. So this is how you can read the chart, or you can easily read to know the entry price and then the exit price. That is when you are given a screenshot. But if it is not a screenshot with closing trades, but running trades, how will you be able to analyze? And that will take me to my next video or my next slide. Now, this is the next slide. This is a running trade screenshot. This one is not a closing trade, but a running trade screenshot. These trades are running. They are not yet closed. So assuming you want to buy or sell, I always advise traders that if you want to set your take profit or stop loss, if you want to set your take profit or stop loss, enter into the market unless you want to set pending orders, maybe buy limit or sell limit, or buy stop or sell stop. Those are pending trades. If you are not setting pending trades, but you want to set an instant execution, you want to enter into the market immediately, I always advise that you enter into the market. Once you enter into the market, you can come back here and then you modify the trade. These screenshots are mobile version of the MT4. These are mobile version. This is on the phone, okay? So once you take the trades, you can modify those trades, all right? So how do you modify these trades? Assuming I have entered these trades, I haven't set my take profit or stop loss yet. I want to set it. How do I go by that? Since this is on mobile phone, you click and hold on this currency or this running trade here. You click and hold on it, there will be a pop-up asking for you to modify. Then you click on modify or edit. Once you click on edit or modify, it will open for you to enter your take profit and stop loss. So once you are going to do that, you need to check what is the entry price of, for instance, USD CAD. The entry price of USD CAD is always the first number here, and that is 1.2 9670. So that is the entry price. And this trade is a buy. So you will ask yourself, how many pips do you want as your take profit? And how many pips do you want as your stop loss? If you need 100 pips as your take profit, you will add 100 to this price. And I have already done how to calculate your stop loss and take profit on this channel. If you go to the playlist, you will see how to calculate take profit and stop loss. In case you still don't know how to do that, go and watch that video. So since this is a buy, you will add the 100 pips take profit to this price, which is the entry price. Then you add and get your take profit price. If you want to set your stop loss, since this is a buy, you subtract whatever is going to be your stop loss. If your stop loss is going to be 30 or 20 or 50, whatever number you want to use as your stop loss, you will subtract it from this entry price. And then you will get whatever price you are going to get will be your stop loss price. Then you can enter or input those two numbers, and then you click on modify and you are good to go. So once you can identify the price or the entry price, you will be able to continue with the rest so easily. Now, at this point, these trades are still running. They are not yet closed. So the next price you are seeing here is not going to be your exit price. Since the trades are still running, the price you are seeing next year is where the price has reached currently. You entered at the first price here, but this is where the price has reached right now. Do you get a difference? Because this one is not a closed trade, it means you are still in the market. So the price you are seeing, the second price you are seeing here, is where the market has reached now. The price of the market at the time that you are watching, that becomes the figure you are seeing there. The same thing to Euro USD. This is the entry price. This is where the market has reached right now, which is the second price. So if you choose to close at this price becomes your exit price because you have decided to close at that price. Do you understand? So this is also the entry price. This is where the price has reached currently. This is your entry price. This is where the price has reached currently. So because these trades are running trades, you are able to tell, you are able to decide and to know your entry and your exit. Now, let me add this quickly before we continue. The running trades, since these are running trades, the price here will keep changing because the price is still moving. So you see that the price here is always changing. The second price you see here will constantly be changing. They will keep changing because you are still in the market. But the entry price will not change. The entry price will always be the same. It will be stable. You will not see this entry price changing because the entry price has already been fixed. So you will not see the price changing in terms of entry price. But the current price will keep changing because the trades are still running. You haven't closed them. Once you close a trade, it means it becomes an exit price. But once it is still running, you see the price changing. That should tell you that that is where the price has reached currently. I'm sure you are clear with this explanation. Now, there is also another very important thing that I want us to look at on the next slide. Now, you want to enter into the market, okay? Listen carefully. You want to enter into the market. You want to be sure the price that you are entering. How do you know that it is that at this price that I am about to enter this trade? Let me show you that. Now, the next slide here, somebody asked me this during the week. When you look, this is still mobile version. The person is using his mobile phone or her mobile phone to trade. Now, when you look at this, you will see two lines on the chart. This is the chart. You will see two lines. One is red. The other one is, do I say green? Yes, green. One is red. The other one is green. These two lines indicates the asking price and then the bidding price. If you've watched some of my videos on this playlist, which is the Forex Training for Beginners playlist, you hear me talking about this bidding price and asking price. So these two lines that you see are the bidding price and then the asking price. Some MT4, when you download them, they may not show you this red line. You may go into the settings and then bring this line, which is the red line. But there are others too that once you download them, they will start showing you these two lines. So when you download MT4 or you go to your chart, whether you have MT4 or MT5, when you go to your chart and you don't see one of these lines, then it means that you need to go to the settings and then bring the second line up. But like I said, there are some, once you finish downloading, you see the two lines. So it is up to you to check on your chart and see whether you have the two lines or not. If you don't, I will advise that you do the settings and bring the two lines, because one is the asking price, the other one is the bidding price. I'm not going to explain that because I have already said that in one of my videos. But this is what I want to say. Anytime you want to enter into the market, listen carefully. The red line that you are seeing here at the top stands for your entry point for a buy. Anytime you want to buy, this pair is USD SEK. Okay, the US dollar versus Swedish krona. Okay, USD Swedish krona. That is an exotic pair. Fine. If you want to know what an exotic pair is, you may also have to go back and watch the playlist. Everything is in the playlist. Some of the things I am saying here, I'm not just saying them because I have said them already. I've explained them already. So US dollar versus the Swedish krona. And this is a 15-minute chart. That was the screenshot the person gave me. It's on the 15-minute chart, okay? Now you are seeing the two lines. If the person decides to buy USD SEK right now, you will be buying from this red line here. So the red line will be your entry price. So the current price here on the red line is 10.09697. That becomes your entry price for a buy. You ask me that why is it not on the green line as your entry? No. The difference between the two lines is what we call spread. That is the commission your broker is taking from you for allowing you to also trade. They need to also make some profit. They are also an organization. They are an institution. So in order to continue to serve, you or continue serving you better, they need to also be making some small commissions from you. And this is their commission over here. Between the asking price and the bidding price, the difference in these prices is what we call spread. And that is what your broker is taking from you as commission. So assuming the difference between these two prices, I am just saying, for example, assuming the difference between these two prices is maybe 7 pips. Assuming it is 7 pips, okay? What it means is that your broker is going to take this 7 pips from you immediately you enter into the market. Whether you are in profit or not, at once, your broker will take this 7 pips commission from you. So when you decide to close the trade immediately after you have entered, your broker is already having 7 pips profit. Do you understand? So your broker's commission doesn't depend on whether you win or lose. Whether you win or lose, they are taking their commission. The commission is taken immediately you enter into the market. They take their commission. So whether you lose or you win, they have already taken their commission. Do you get it? So once you want to buy this pair, you are going to be buying from this red line. And anytime you are selling, assuming you want to sell this pair, you'll be selling from the green line at the down there. So what it means is that when you buy and the price is taken from this red line, what it simply means is that before you will make profit, listen carefully. Now you have decided to buy this pair, USD SIG, at this price, which is the red line here. Before you will make profit, unless this green line comes above the price over here, which is the red line. When the green line must come up, and then go above this entry price before you will be in profit. Does this make sense? Let me repeat again. Before you start making profit, you have entered a buy for USD SIG. Before you make profit, unless this green line here comes above this entry price here, because this is where you enter the market, then you start making profit. If the price, this green line never comes above this red line here, never comes above this price or level over here, it means you are in a loss. Does this make sense? So once you enter with an entry price here, you are praying that this green line will come up above this price for you to be in profit. And that is why if you watch the signal playlist, I always tell you traders that before you enter into the market, make sure that the spread on a pair is closed. And what I mean by the spread being closed is that the difference between these two lines should be small, maybe 2 pips, 3 pips, 5 pips maximum, depending on what broker you are using. But if you want a broker that will give you tight spread, a difference of 2 pips, 3 pips, maximum of 5 pips, go to the description of this video and you will find the link to my broker, the broker that I use to trade. You'll find a link to that broker in the description of this video. You can sign up using that link, and I'm sure you are going to enjoy some tight spreads. Okay, so that is that. So when you enter a buy, the entry price becomes the red line. So anytime you want to enter a buy, you are watching the red line at the top. That is what you'll be watching, because that is your entry price. The red line indicates your entry price. So if the difference between the green line and the red line is 7, like I said, and you want 20 pips, once you enter into the market, you are not just going to be targeting 20 pips from this green line. Do you understand? You are not going to be targeting 20 pips from this green line. You are going to be targeting 20 pips from this red line upwards, 20 pips. Because between this green line and the red line here is already taken by your broker. It's for your broker. It is not for you. So if you are going to be using the green line to calculate your take profit of 20 pips, then what it means is that if you should use this green line to calculate, you are only going to get 13 pips profit because your broker has taken 7. So instead of you calculating your 20 pips profit from this price here, you decided to calculate it from this price here. So your broker is taking 7 out of your 20 if you are using the green line to calculate your take profit. So it means your trade will close and you see yourself having just 13 pips profit, and you'll be like, what is happening? This broker is fake. They have cheated me. No, they haven't cheated you. You didn't understand what you were doing, because Forex trading, you need the knowledge to understand what is happening in the market. You didn't know that you were calculating your TP based on the green line. Meanwhile, you were supposed to be calculating your TP based on the red line because you are buying. So you ended up adding the broker's commission to your profit. So you were targeting 20 pips, and then you decided to add the broker's 7 pips to your 20 pips. So at the end, if the broker should take his 7 pips, you are left with just 13. So you didn't get the concept, and not that your broker cheated you. Is that clear? What if you are selling? If you are selling, the selling is going to take effect from the down line here, which is the green line here. So the green line here becomes your entry price for a sell. The green line here becomes your what? Your entry price for a sell. So before you can start making profits, unless this red line you are seeing here comes below this entry price. Once it comes below the entry price here, then you are in profit. If this red line remains above your entry price, you are in a loss. Do you get it? It's simple as that. Very easy to understand. So if you are trading on your chart and you don't have these two lines, I'll please beg of you to do the settings to get the two lines, the asking price and the bidding price, so that it will help you to do your calculation well. But in case you are going to be having the difficulty of knowing the entry price, whether you are selling or buying, because you don't see the two lines, or maybe the two lines are very confusing, then I will advise that you go to the trade, like I'm showing you here. When you come to the trade, when the trade is running, you can be able to see the entry price, which is the first price here. So if you want to at least spare yourself the confusion, you just come back to the running trade, and then you can get your entry price over here. So these are the entry prices. So you can use these prices to calculate your 20 pips profit, or your 20 pips stop loss, or whatever take profit or stop loss you want to calculate. Is that okay? So to spare yourself the confusion, you can always go back to the running trades, and then you get your entry price from there to do your calculation. Have I said something new or something nice? Did you guys understand what I just showed you? If yes, please like this video. Like this video for me. The more you like this video, you are telling the YouTube algorithm that this video is good, and so they should suggest it or show it to more people. So please like our video, and then make sure that if the need be, leave us a comment. Okay, thank you. Now let's go to the psychology aspect. This is where things are very, very important to me. Keeping records of your trades. Is it important or not? Let's read these notes quickly because the video is already long. But thanks for the patience so far. Like I said, I don't rush to do my videos, so take your time and watch to the end. Now, keeping a record of your trades. Let's read some notes. First point, keeping a record of your trades is key if you are serious about developing your trading skills. Trade journaling, that is keeping records, is a hard habit to maintain. But you see that I put this in bold. But you must remember that you can't improve what you don't measure. And you can't measure what you don't remember. It's very important. But you must remember that you can't improve what you don't measure. So you need to keep a measurement somewhere. And you also must remember that you can't measure what you don't remember. You took trades that you don't even remember, or you have not kept records of. How do you measure your success or failure? You can't do that. And you must remember that you cannot improve if you can't measure. If you can't measure your success rate or your losses rate, the number of times you lost and the number of times you won, how can you improve? So what I'm saying is that book recording or keeping records or video recording, whatsoever type of records that you keep, is very, very important in Forex trading. But here is the question. Is it the book recording that is very important, or the video recording that is very important when it comes to keeping records? There are a few of you that do book recording your entry price, and then recording your take profit price, and then recording the pair that you took, and you then end up to say whether you won or lost. How many pips you won, how many pips you lost. You keep records of that in a book. That is fine. There are others who also record at most maybe 1 minute of a trade. Immediately they enter into a trade, they go to the chart, then they record at least 30 seconds or at most 1 minute of the trade. And then they keep that recording as a video somewhere. And then at the end of the day, they compile these short videos and then use them for their analysis. And that is what I want to ask, that should we concentrate on the book recording or the video recording? Which one will be the best, if you ask me? Now, this will be my answer if you ask me. Let me go to the next slide and you will see my answer right there. Now, video recording for me is going to be the best option to go for. Why? Let's read some notes. Point number one. One obvious benefit is that, and when I talk about benefits, I'm talking about video recording, keeping a journal of videos of your trades. One obvious benefit is that it can help you keep a more accurate journal. Why and how? Point number two, videos can show you how price behaved, your emotional reactions, what your thought processes were, what you saw and decided to enter a buy, or what you saw and decided to enter a sell. It will give you that. The video will give you that. Your thought processes, what they were before you took that trade, and how if you eventually managed your positions. Now, after you saw what you saw and decided to enter into the trade, how did you manage those positions? So video journaling is very, very important because it will help you to analyze all this. But if you are keeping a book record, you may not be able to even see the price pattern to know why you took a buy on this or you took a sell, because you saw a pattern. If you are doing the naked chart without any indicators, maybe you are doing support and resistance, maybe you saw the price at a certain support, that is what influenced you to buy or sell. Then once there is a short video recording, anytime you look at the video, it will give you that reflection to know that, okay, it was based on this reason that I took this trade. And what happened afterwards? Okay, after I saw this and took a buy, I ended up losing. Okay, if it is indicators you are using, okay, this was what the indicator told me or said to me, which influenced my decision to sell. Okay, but after I sold, I won. It was a win. Okay, then if I should see a similar thing again on another chart, that will influence me to take another decision. Or in case you lost, then it means that when you should see a similar pattern, then you will decide to hold on and say, no, I did this the last time and I lost. So seeing this similar thing again, no, I wouldn't do it. Video will be able to help you, but book recording will not be able to give you that in-depth knowledge. Now I'm building my point to the reason why I'm saying short video journaling is very important than just the book recording. Point number two, it can help you spot mistakes that you wouldn't have noticed or remembered without a video. Simple. It will help you to spot your mistakes because the video is there. Once you watch it, you say, oh, this was what I saw that made me to buy. Okay. But at the end of it, I lost. So it means when I see this thing next time, I don't need to buy. Okay, this was what I saw that informed me to sell and I lost. So when I see this next time, never, I wouldn't go in to sell. Okay, this is what I saw here and I took a buy and I won. Okay, next time when I see this again, I'll take a buy because you are watching a video, you are watching a pattern, you are watching something. But book recording, you wouldn't be able to have that advantage. Now, let me build some points more. It's not much different from athletes. What I'm saying right now, those of you who love football, and those of you who understand a bit of coaching will appreciate this point here. It's not much different from athletes and coaches reviewing the videotapes of a match to spot mistakes they might have made during a play. So yes, assuming Liverpool, my favorite team, has played maybe Manchester United and Liverpool won. Okay. Now, Liverpool is keeping that video. And then I think that, no, hold on. Recording must be paused. I think, let me pause it. Okay, so I had some hitches. So quickly, let me continue this video. And end quickly. I had some hitches, so quickly, let me continue this video. So, like I was saying, those who are into football will appreciate that we have video analysts. This video analyst, they watch the whole match after it's been played, and then they look at the mistakes. So, if Liverpool played maybe Manchester United, the two coaches have video analysts that are going to watch the video, or even before they meet their next opponent, if it's going to be the same Liverpool next time, they will take that video they had, or the previous match they played with Liverpool, or they are going to take some of Liverpool's matches they played with other teams, and then they analyze that, and then they look at the mistakes Liverpool committed, and then they capitalize on that. Manchester United will capitalize on the mistakes Liverpool committed during their past matches with other teams, and then they capitalize on that. The same thing is Liverpool is going to play Manchester United. They also get some videos Manchester United played, or matches that Manchester United played, and then they also review. They have those technical bench that will review those videos and look at the loopholes. What Man United did in the other matches that they lost, that they won, they look at that and then they prepare accordingly. Do you get this analogy here? So it is the same thing in sports. You need to keep a record. Why don't they just watch pictures? They don't watch pictures because pictures don't give much information, but the video will help them to analyze the match in full. Look at the opponent's mistakes, and then they capitalize on that. Look at the good things the opponent did in order to win, and then they prepare to match them in that regard. So you need this video to help you to analyze all these things. So the video recording is very, very important. Now, the next one says that videos can help answer questions like, was your analysis completely off? Did you have a problem with the execution? Were there any market elements or signals that you missed? So all this will come to play when you watch a video journal, or you keep a short video recording somewhere. So answers to these questions above can help you make conscious efforts to avoid the same mistakes and practice more deliberately in your next trades. So you see why the video journaling is very important than maybe the book journaling or some screenshot or picture journaling. Now, to end this video, because the video is already long, let me say this. Recording videos won't help much if you don't take the time to review them. If you know you won't have the time to go back and watch the videos of trades you took, then don't worry yourself taking them, because you will not be doing yourself any good. So try setting aside an hour or two after the market hours to review your videos, and make sure to incorporate this habit into your routine trading for maximum impact, because this habit can be the most rewarding, especially if you are consistent with it. So if you know you don't have the time, then don't worry yourself. But it will be good that after a long week, 5 days trading week, you take a Saturday or Sunday, just 1 hour or 2 hours of that time to review your trades and to look at some mistakes and errors that you committed. And then once you watch all these videos, you prepare yourself towards the following or the coming week. So please, if you are not going to have time to review the videos, don't worry yourself. You are just going to be worrying yourself by recording them. But if you really mean what you are doing, then it will be very important to keep records of this in terms of short videos, and then review them after a whole trading week. All right. Maybe after a month or a week, you can review, prepare for the following week. You do that, prepare again consistently. That is how you can improve your trading. Is that okay? Now, we are done. Subscribe to our YouTube channel and expect more videos. Tomorrow, which is Sunday, I'll be coming your way with Forex. I hope you understand. So forecast will come your way tomorrow. Signals will come your way, which possibly we can trade when the new week opens for traders. My name once again, Kofi, your admin. Thank you for staying here, and we will always do our best to come your way all the time with new information that we believe can be of help to you. Until then, thank you, and I'll see you in another video.